Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. It's the monthly stock picks of the month and update video, episode 44. Welcome aboard if you're new to the channel. My name is Adrian, where we cover income-oriented investing. So this is going to be your number one source, or your one-stop shop for anything that's high yield, high dividend yield, and that's really income focused on both the Canadian and the US stock market. So we got a lot to cover today because there's some big updates on a lot of our favorite income oriented funds. There's some big news on both the Canadian side and the US side. So welcome to episode 44. Let's get to it right away. We'll take a look at what the markets have done in the last month, and then we'll go over the income landscape in Canada and also on the US side. So let's get to it. Before we get started, I'd like to take a moment to thank the sponsor of this video, Harvest ETFs, one of my personal favorite covered call ETF providers in Canada. Of course, they have HDIF, the Harvest Diversified Monthly Income ETF, which combines all of, or not all of them, but most of their covered call ETFs all in one place. So it's very, very well diversified. And they add 25% leverage to enhance the overall income. You could see here that right now the yield is just under 12%. Very, very, very high yield. And they do have a non-leverage version. Just click on this button and you have HRIF, the non-leverage version. So again, I'd like to thank Harvest for being such a good friend of the channel. Check the links below. They do have a newsletter that's very interesting if you want to sign up to that to stay updated on what they're doing and what, the stocks that they're tracking. So now let's look at what the overall market did in the last month. So this is the S&P 500 up 2.35%. You could actually see that really it's at the end of really in the last week that it went up pretty significantly. Same kind of story for the Canadian market, even harder in the last month, 3.59. The Canadian market, which is very cyclical based on a lot of energy, but mostly financials, really is taking a beating in October. And to be honest, I recovered a lot the last couple of days here, which I found disappointing. I was looking forward to longer, instead of higher for longer like the Fed, lower for longer is what I like when it comes to stock prices, because you could just buy more cheaply, right? So the markets have done really well. Will they continue? Was this just a one hit wonder type of thing in last week? I have no idea. I don't predict these things, but hopefully there's more sales coming up. So let's take a look at the Canadian landscape now. First, when it comes to the income-oriented funds, and I remind you, if you're American, if you only care about the American stock market, use the YouTube chapters below to skip this portion, right? So let's close this off. So of course, we're going to cover HDIF because not only did I cover it during the sponsorship mention, but I will mention that they added a new ETF, which is not really surprising. They added their HPYT ETF, their Harvest Premium Yield Treasury ETF, which is government bonds with covered calls. So it is a very small position here, 3.3. I'm not sure if it's going to stay at 3.3 or, maybe they'll increase it and it'll become equal weight with the others. We'll have to wait and see. But I think this is a phenomenal move, because HPYT has a yield of over 15%. So this, of course, will help HDIF have a higher yield. Will it mean that they will increase their monthly distribution? Don't know, but it definitely helps the fund to generate more income. So HDIF, one of my personal favorites. I own this one myself. I picked up some recently, another $5,000 worth. I think it's a really good pickup. It has recovered nicely lately because the US banks, which have been under tremendous pressure, have recovered a little bit, and HUBL, which is just US banks, is inside of HDIF. So pretty big news here when it comes to HDIF. We've added a new ETF in here, so now this is even more diversified, and it also has a little bit of fixed income, not just pure equity. When it comes to Hamilton, of course, we love our H yield, or HYLD, which is a really nice yield of over 12% now. And the big news for this one is they've also made some changes. You could see that here, that they've kicked out NXF, the energy ETF, for SMAX. This is Hamilton's first broad-based US-focused yield maximizer ETF, and they've added it in here. Now, I really doubt it's going to stay at 3.1. I think it's going to increase over time. And if I know Hamilton well, they're going to do their changes gradually, which is a good thing, because if they're creating more in-house products like SMAX, like QMAX, and add them in here instead of the external ETFs, it's just going to mean lower fees and higher yield. And I know that is what their goal is. So pretty exciting stuff. Keep your eye on HYLD. Of course, if you follow this channel and watch this episode every single month, we track HYLD, we track all these ETFs in detail. So really cool to see SMAX get added. I personally wouldn't be surprised if the percentage starts growing and a lot of the external ones like QYLD, RYLD, XYLD, JEPI, JEPQ, QQCC, USCC start getting reduced for more SMAX. It just makes sense because the exposure is the same. You just save on management fees, right? HDIV, no changes in this one here whatsoever, but we'll keep our eye on it. Very focused on sector specific covered call ETFs, just like the name says, but it's not a pure covered call ETF play. It does have HFIN and HUTS, which are non-covered call ETFs based on utilities and the Canadian financials. I thought that was a really cool idea. So we'll keep an eye on this one, especially with QMAX. I have a feeling maybe they'll swap out HTA for QMAX because it's basically the same thing. And why harvest the fee when you could just put your own in-house product and not pay the fee? So we'll have to see what, we'll keep an eye on it and see what Hamilton does. BMAX, the very stable leveraged all-in-one solution from Brompton. No news on this one. It's still chugging along. The distributions have stayed 100% stable at 10 cents a month. This is actually a favorite. If you really like high income, but you don't really want a lot of volatility, you don't mind leverage, you have BMAX because this is actually 30% in fixed income and 70% in stocks. Evolve has two broad-based options, which I recently covered in a video. You literally have ESPX, which is the S&P 500, with covered calls up to 33% coverage of the portfolio. You see here the yield is about 9%. And they have the same thing on the TSX 60, which is your overall Canadian exposure. Same coverage up to 33%, which a nice yield now, about 10%, because the Canadian market did suffer recently more than the US one. So there's a lot of good Canadian stocks on sale. So if you like the broad-based indices, you like these indexes, you're an index investor, but you like covered calls, you want more income, and you don't want the leverage, these are two great options. BMO, ZWQT, they're all in one. This is going to be the lowest yielding one at about 7. This combines most of BMO's covered call ETFs in one. This is like a one-stop shop here. So if you're a little bit more of a conservative income investor, you like the brand, you like the big AUM of BMO, while ZWQT is going to be a good option. And then you have Horizons, which has had a big month because they launched 9 brand new ETFs. And I'm still working on the video. I'm working in partnership with Horizons to come out with a really good video covering all these 9 ETFs in perfect detail. So you have, these are some of my favorite ones. You have USCL, which is kind of like S&P 500 with covered calls and 25% leverage. Of course, you have the non-leveraged version, which is USCC. Basically USCL is just USCC with 25% leverage. You see that here. So brand new to the mix is a leverage version of their NASDAQ 100 covered call ETF, QQCC. So you have, of course, QQCL, right? It's just QQCC with 25% leverage. So now you have the S&P 500 one, you have the NASDAQ 100 one. Look at this yield. This is based on the first distribution, which was just declared. And by the way, USCL, they did reduce tiny bit the distribution in the last one here. So yeah, you got your two overall US ETFs here. One covers the NASDAQ, this is new, and this one covers the S&P 500, you could say. They also have CNCL, which is your TSX 60. Think of CNCL as a leverage version of TSX. It's literally the same index, except this one has 25% leverage. So as you probably guessed, it's just 25% leverage on CNCC, the non-leverage version, right? So this is, these 3 are going to be great ETFs if you want overall US and Canada options, you want broad-based diversified, but you want that high monthly income and you don't mind that leverage as well. These are going to be really ones I'm going to be following forever on this channel every single month because they're very, very interesting. And I believe this one also lowered distribution just a tiny bit from 0.206 to 0.2. Very, very, very tiny. I'm assuming they're just, the non-leveraged ones, by the way, didn't change their distribution. So I'm assuming it has something to do with maybe their leverage costs went up. That would be my guess. So this is another brand new ETF, just like QQCL, but it's EQCL. And I personally believe this is a game changer. This might actually be the game changer ETF of the year because it combines, it's basically HEQT. So in case you don't know what HEQT is, you probably know what XEQT is or VEQT. So these are growth ETF, all-in-one, one-stop shop growth ETFs where they combine very popular passive index ETFs like the S&P 500, the NASDAQ, emerging markets, all in one ETF. So it's like, give me all the best stocks all around the world with the lowest fees just in one ETF. This is literally an income version of that. So it's basically like HEQL with 25% leverage and, HEQT with 25% leverage and covered call. So you have a really nice yield of just under 12%. If you look at the holdings, it actually combines the three ETFs that we just saw, the S&P 500 one, the overall Canadian one, and the NASDAQ 100 one. But there's also the emerging markets ETF, and there's international developed markets ETF, which is kind of like, Japan, Australia, and Europe. So this is literally giving me everything all around the world, but with covered calls and a little bit of leverage. So this is really a one-stop global shop for us income investors now. Very, very interesting. Think of it like HEQT with leverage, 25% leverage, and covered calls. And by the way, now they also released HEQL, which is basically HEQT. Here it is. And stay tuned for my Horizons video where I'm going to go into these new ETFs in detail. But HEQL is basically HEQT with 25% leverage. So if in case you're a growth investor, you want a little bit more of a boost, HEQL now is a great, fantastic option that we have from Horizons. NECL is also brand new. It's basically what QQCL did with QCC. It's ENCC with 25% leverage. So this is the highest yielding energy covered call ETF by far now on the Canadian market. Really cool, but it is sector specific, however. So yeah, that's a great option. Now, brand new ETF as well. Again, stay tuned for Horizons video where I'm going to cover all the 9 brand new ETFs that have come out, 7 of which are income ETFs. So very, very interesting for us income investors. Moving on, continuing with the ETFs, last 2 ETFs we're going to cover is the Bitcoin and Ether one. There's been no changes in terms of distributions, but the distribution on the BTCY.U and ETHY.U have been reduced substantially. I know it kind of sucks, but they're basically now fallen in line with the other ones, and that's what Purpose told me. I emailed them, asked them about it. So this could, the Bitcoin one especially, you could see that has increased significantly because of the speculation on the Bitcoin spot ETF. But I think the same thing might happen to Ether. So Ethereum, which has a little bit more yield now, I think this one's probably next to pop, even though it has already, but it could go much higher. So I'm looking at, these ones could be still great buys right now in case, you believe in crypto. If you don't, well, I would probably, if you don't understand it, I would probably stay away. But, these are obviously going to be much more risky, higher risk, higher reward. Moving on to closed-end funds now, all our favorite closed-end funds and split funds. Of course, you have EIT, the king, which is still amazingly still trading at a very small discount. Always a good time to buy some of this, and there's been no changes. It's still the king, still giving away that nice 10 cents a month for the longest time. Very, very solid. Not exactly, it is income focused, but it's not really a covered call product. This is more of a stock picking mutual fund, income oriented. And these guys, let me tell you, they definitely know how to pick their stocks. And remember, EIT is leveraged 20% because they do have 2 preferred shares, each of which give 10% leverage to the fund. Now, moving on to split funds, our favorite, right? The most controversial, DGS is still trading at a discount. It's recovered a lot in the last week. You can see here that the NAV is $4.74, so we're getting close to that $5 mark again, where it could start paying. And you see that you could actually pick it up, or the stock price is $4.66, but the net asset value is worth more. So DGS still a great pickup. Even GDV, by the way, it is trading at a small premium. You could pick some up for over $8, but it's worth $7.64. But this is a split share fund that's very, very well diversified geographically and sector based. One of my favorite split share funds. I picked up a little bit recently as well. Really, really nice high yield, and I really doubt it's going to be in danger of not paying. This focuses on the best dividend stocks all around the world. The other 2 that I really like are LBS and SBC. They're trading at premiums right now, even though they're at higher yields. You do have PWY, which focuses on utilities, which has been zigzagging around that $5 mark, but it is trading right now, as you can see, at a very small discount. Picks them up for $5.30 when it's worth $5.66. So if you're in the market for some sustainable power and infrastructure stocks, this could be a good pickup right now. You get a really nice 15% yield, but you do have to contend with possibly missing dividends if the unit NAV goes under 15. Moving on to the middle field ones, which are very, very strong. They don't do much covered calls on these. RS, they don't do covered calls at all. ENS, I spoke to Rob Lozon recently on the channel. He says he's not even doing covered calls on Enbridge right now because they feel very strongly about it. However, these are trading at about 15-16% premium, something like that. So still not a bad time to pick some up if you believe in Enbridge and if you believe in real estate, two categories that have been suffering. But both of these have picked up a lot of steam in the last couple of days, like everything else. Moving on to DFN. So DFN is, your most popular Quadravest one. Unfortunately, the new, the NAVs have been updated, but the date is October 31st. So it's not going to count the big rally that the markets had at the end of last week in November. So I'm assuming it's much higher than 383 now. I'm pretty sure it's over $4. So DFN could be a great pickup now. This is a split share fund that always trades at a premium. And when you're investing in DFN, these are the stocks you're investing in, right? Don't forget what you're investing in. It's just a lot of leverage. So it has great potential to skyrocket. We actually see, I think it was last week, it was up, or there was one day where it was up 12% in one day. So remember, everyone, the lower the split share funds go, the more of a leverage effect there is. And I'm happy to announce that I'm meeting with Brompton this week. We're going to talk all about split funds. Finally get some professionals who actually manage them to actually talk about them and how they work. I know many of you were worried about them because they've had a lot of volatility, but we'll talk to Michelle and Chris. I think you'll really like that Q&A. Don't you miss it. Should be coming up in the next couple of weeks. FTN could also be a great pickup because it's only financials. And check out this stock, the stocks in here. So you got it's about 60% Canada or 40% US, but it's got a lot of concentration in the US banks, especially the big ones, JP Morgan, Bank of America, Goldman Sachs, Wells Fargo, and Citigroup, which are the top 5. And then you also have, of course, Sun Life and Royal Bank Toronto. So again, this is still the unit NAV here at 1553, still above water, still going to pay. But again, this is as of October 31st, so it doesn't include the big rallies that we had last week. So I'm pretty sure this one could easily be $16 unit NAV. So great pickup right now if you want. Calculate the yield. It's like over 20%, which is pretty crazy. But you do have to remember that if the financials take a beating again, even though these are the top quality ones, it's possible that FTN will start missing distributions. Personally, I picked up another $5,000, $40,000 total investment in FTN. My book price is over $10 right now. The stock price is $6, but maybe I'll buy some more to average down. BK still trading at a big premium. $7.92. I think it's over $10. So big premium. I would probably stay away from this one right now. So on the Canadian, that's it in summary for our top favorite income-oriented funds. I'm not saying there's a lot more, but we can't cover all of them. I will have to say that still the financials, everyone, especially the US financials, even the Canadian financials are on sale, even though they've rallied last week. I just came out with a video, last Sunday's video, where I review the 15 Canadian bank ETFs. So check out that video because I'm not going to go through them here, but all the top ETFs that you could focus on to capitalize on the weakness in the financials in the 6 banks. Check out that video, and it's really up to you which ETF you choose, which one is best for you, but they all pretty much invest in the banks. On the US side, you're going to have Call, ZWK, and Hubble. These are the 3 covered call US banks ETFs. I personally own Call. Even though it picked up a lot of steam recently, it's still 35% down from its 1-year high. Same thing for ZWK. Hubble is 30%. There's still a lot of opportunity in the US banks and the Canadian banks, everyone. That's still my, I would say the sector that's really the most on sale in the markets right now. It's really the financials, and it's not going to last for long, guys. Trust me. So that's it for the Canadian space. Let's do everything again, but for the income funds on the American side, and there's some exciting news on the American side as well. So let's check it out. All right, let's do the US landscape, everyone. We're going to start, of course, with QYLD, RYLD, XYLD, and, just chugging along their monthly distributions. You could keep seeing them here. And of course, they're going the last one was a bit lower because the net asset value was a bit lower. So remember, you'll pretty much get the monthly distribution is going to be very close to 1% of the net asset value. So that's just how they work here. So QYLD, RYLD, XYLD. They had, I think XYLD had a bigger distribution if I look. Yeah, so 38 cents instead of 33 cents last month. And this is because, the volatility has been higher in October compared to September. So you see the premium they got on the S&P 500 is higher. So remember how these work. These are if you're a complete pessimist because they give up pretty much all the upside for the biggest premium every single month. Of course, we have the king, the biggest covered call ETF in the world, JP Morgan Premium Income ETF, which really follows more or less the S&P 500. Their distribution is almost the same as last month, really. Then you have JEPQ, which is actually quickly gaining on QYLD in terms of fund assets. Obviously, it's going to beat it eventually, and very similar yield to QYLD, but lower fee, and you have more upside. So I think the guys at Global X are pretty much shaking in their boots here. But hey, different cover call strategies are for different people, and this one pretty much the same distribution, tiny bit higher than last month. So of course, the Nasdaq's a little bit more volatile, so you're always going to get a bit more yield than JEPI. There's SPY-I, which is from NEOS, pretty innovative way to get, they try to get 1% a month on the S&P 500. I find it's performing really well. It's, it could be a really nice, really big competition for JEPI and of course XYLD. So I wouldn't be surprised if they actually come out with a NASDAQ one. I think that would be very interesting. If they could do 1% on the S&P 500, maybe they could do a little bit more on the NASDAQ. I'm very excited about that. I'm sure they'll come out with it. It only makes sense. Now we have more players, of course, QQQY and JEPY. So QQQY is a NASDAQ, one from Defiance ETFs. I just made a video covering these and trying to figure out what their behavior is. So these are extremely high yield, which means they're going to be extremely misunderstood. They're a bit more complicated to understand, but I try to break it down in the last video, so make sure to check it out. It's really not that complicated. The second distribution on QQQY was declared at $1, and JEPI actually increased it a little bit from 90 cents to 91 cents. And here's the first big new thing. They came out with their Russell 2000 one, right? So this would be comparable to RYLD. Just the same strategy, daily in the money puts, except it's on the Russell 2000. So if you want, the Russell 2000 is 2000 smaller cap companies. So, this would be big cap on the NASDAQ, big cap on the S&P 500. And, if you want more diversification, you could always get this one as well, the Russell 2000 one. So the first distribution has not been declared yet, but I expect it's going to be pretty high, very similar to similar to QQQY and JEPY. SVOL, really the king of the alternative income, still going extremely strong. It's growing. It's about to hit 500 million here. Distribution hasn't changed. Still 30 cents a month. It's been 30 cents for a while. I do have the possibility of getting Shailesh back on the call. This guy here who manages this fund. Let me know if you guys want, what you want me to ask him if I get him back on the call. But hey, SVOL is, I really like it. I have these as great secondary positions in both my RSP accounts. They also run Maxi, by the way. If you're interested in Bitcoin, which is making a splash lately, Maxi is a great way to do it. Very innovative because they're not writing covered calls on Bitcoin. They have Bitcoin futures, and then they do bull call spreads. Here it is, short dated put or call spreads on the most global liquid equity. So it's kind of like a way to invest in Bitcoin and potentially generate some income, or it could be viewed as Bitcoin exposure with downside buffer. So this is really a cool way to invest in Bitcoin if you're an income investor like myself, just saying. We got the iShares ones, the TLTW, LQDW, and HYGW, which has recently announced their new distribution. So TLTW, much bigger one, 40 cents this month. And this could be a really good pickup, guys, because as soon as interest rates start getting cut, the value of TLTs should be going up. LQDW on the investment grade corporate bonds, little tiny bit higher the distribution. And then you have HYGW, which is just regular high yield bonds, also higher. So these ones have really nice increased their distribution lately. Now we have Yield Max. So Yield Max just keeps adding more and more ETFs. You have the PayPal one, the Block one, the Moderna one. So they have a bunch of them now. Still, monthly distributions are still being declared. And one very important announcement is that they have filed for 2 new ETFs. One of them is an all-in-one Yield Max ETF, right? So it's called the Universe Fund of Option Income ETFs. The stock symbol is going to be Yield Max. This prospectus was just filed with the SEC. You see here, November 25th. So very excited for this one. How is it going to do it? Is it going to just be equal weight? Is it going to have all of them? Is it going to have some of them? I'm not sure. We'll have to wait and see. And they also came out with a Magnificent 7 one. YMAG, that's, and again, these are not out yet. These are just the prospectuses, which are going to have probably the Magnificent 7, right? They'll probably have the Apple one, the Nvidia, Amazon, Facebook, Google, Microsoft, whatever, and Tesla, right? The Magnificent 7. So really, really cool. That is really the big announcement for Yield Max. So stay tuned. All-in-one Yield Max ETF looks like be coming out soon. I'm very, very excited. I'll probably get Jay back on the channel so we could talk about this one. I'm very curious to see their methodology. And by the way, when it comes to QQQY and JEPY, this is the video I was talking to you about, which just came out. What exactly are the risks? So I go through, I pick and choose the really good clips where Sylvia's talking about the risks about these ETFs. They're really not hard to understand. I break it down in this video. So if you're curious, if you're invested in QQQY, JEPY, you're thinking about it, even this one, I strongly suggest you check out this video. So moving on, we have a clip which is 100% at the money covered calls on the K-Web, which is Chinese internet companies. This one as well declared their distribution a little bit lower from last month. You actually see the monthly premium. They added this column, which I thought was cool. Moving on to closed-end funds. So now you have CLM, which is basically, reset their annual dividend. It's going to be lower for 2024 because they're going to reset it at 21% at NAV, and last year it was $7, so it's a little bit lower. You see that the premium is pretty decent at 12.69%. And don't forget, guys, CLM, my opinion, the key is some select US brokers drip it at NAV price instead of the stock price. This is why personally I sold off my CLM position. So 12%, last week I think I saw it at 3% premium, which I never saw in my life. It was a great pickup, but it has recovered a little bit in the last week. If you want an all-in-one closed-end fund solution, of course, you have triple Y ETF, you have the CEFS ETF, these, and you also have HIPS, which combines closed-end funds, MLPs, and REITs. So this is all could fall under the category of alternative income. You have those 3 ETFs. My personal favorite is RIV. You see here that it's trading at a really nice discount of over 11%, right? It's worth $11.71, but you could buy it for $10.45. I have this one on drip, just dripping away, buying shares on sale. So it's going really, really well for me. You got to think long term, though. I know if you look at the stock price, it's scary, but really all that matters is the NAV. And because this is mostly fixed income, I think when eventually the rates start getting cut, this is it's gonna recover very, very quickly. And so is OPP, which is at an even bigger discount and even more focused on fixed income. So if you're looking for really a way to capitalize on the really weak fixed income that could recover, when rates start getting cut, you have OPP and you also have TLTW. I think these are probably the 2 biggest plays. You also have RA. I got to mention it because they recently cut their distribution. The stock price fell like a brick, but look at it now. The net asset value is $14.45, so it's worth $14.45, but you could buy it much cheaper. So this one's trading at a really, really big discount. Still a good pickup. I have this one just going on drip. So I am buying shares every month at $12.42 instead of $14.45. So I couldn't be happier. So again, make sure to check out this video if you're interested in QQQY and JEPY. And don't forget that I have a PI Inner Circle membership. All you have to do is go to any one of my videos, you click on join, and you'll get the 2 tiers that you could join. If you like this video, the picks of the month, I do offer, or if you're a member, a weekly newsletter and opportunity report, which is kind of like a condensed version of this. if there's any news, what's on sale, what funds you could buy. So if you like this video and you really like also the portfolio unveiled videos, I strongly suggest you sign up, because you get a weekly newsletter opportunity report and you get to see what I'm doing with my portfolio the day of. You get real-time stock trade alerts, as well as other perks and benefits like exclusive videos, exclusive live streams. So if you're interested, just go to my video description and you see this link here, details on the PII Inner Circle membership. I actually go through from A to Z the benefits of the program, and it's only $3 Canadian, which is like 45 cents US or something nowadays. So that's it, everyone. We're going to do this again next month. Looking forward to it. Remember, this is your one-stop shop for income investing. Anything new in the income world is going to be covered on this channel, so make sure you're subscribed, and see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, PassiveIncomeInvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and Passive referral links below. So Questrade is the broker that I personally use, and Passive is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And Passive, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of Passive is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.